Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello, Namaskar. You're watching Market Today. I'm Tanya Neja. Well, this is a show where we'll discuss all the market action in the closing last 1 hour and, of course, the stocks and sectors that are buzzing in today's trading session. And if you look at the markets at this point in time, they are completely flat as we speak. 22,233, that's the level on Nifty. Remember, the high that we hit today was of 22,297. We have come off from that intraday high that we hit, 22,222. That's the level where we are at as far as Nifty is concerned, and Nifty Bank is also trading flattish on a flattish note today. 46,864, that's the level on Nifty Bank. And if we look at some of the gainers and losers from today's trading session, it's the stock specific action that is taking place in today's trading session. Bajaj Finserv is the top gainer for you, 1617, that's the level on this counter, 1.5% uptick there. Some of the life insurers are doing pretty well in today's trading session. SBI Life, one of them. Remember, this stock has been consolidating for the past few trading sessions, but now today, if we look at this counter, it is one of the top gainers for you. Dr. Reddy's from the Pharma Pack, 64441, that's the level there. HDFC Life, again, some of the life insurers, and M&M from the Auto Pack is also trading in the green today as we speak. Now, if we talk about some of the losers on the flip side, HCL Tech is the top loser for you from today's pack. Remember, this counter was the top gainer yesterday. Bit of a profit booking taking place as we speak. 1665, that's the level on this counter. Asian Paint, one of the top losers for you. BPCL, Maruti, some of the oil marketing companies, continue to remain under pressure, like BPCL. 619, that's the level on this counter. And if you see sectorally as well, there are certain indices that are trading in the green, like auto, financial, media, the top gainer for you, 1.18% uptick there. Metals, pharma also, and we have real estate pack that is on a roll today. Healthcare index is up around 0.5%, but it's the mid cap and small cap space where all the action is happening, and we are going to focus on that in this show as well, because Jefferies' Christopher Wood, in his latest Greed and Fear note, admitted that the Indian market looks expensive, most particularly from a mid cap standpoint. He said that the Nifty Mid Cap 100 index is now trading at 25.9 times 1 year forward earnings, compared with 20.2 times for the Nifty. However, he said that India stays the best equity story in the world on a 10-year view. Remember, India joined the $4 trillion mark club on 29th of November 2023, and the combined market value of all listed stocks on the BSE has grown to $4.8 trillion in less than 3 months. And if India hits the $5 trillion level in FY24, it would mean a $1 trillion wealth creation in just 4 months. So where are the pockets of opportunities and where is the market headed? To discuss this, let's welcome our guest on the show today. We have with us Mr. Kranti Batini today, who will decode the market action for us. So Mr. Batini, very good afternoon to you. Good to have you on BTTV as always. Let me start by asking you about the current scenario in the markets. Markets are flat at this point in time, but we have been hitting record highs on a daily basis, and this week, what a stellar rally we have seen. 22,200 important mark already done and dusted on Nifty. What's really next, and how are you approaching markets?
Hi Tanya, good afternoon. Yeah, really markets are exhibiting a stellar performance, but what we can see is the sense in the market right now, markets are entering into a slightly at a consolidation phase at the higher note. At the higher note, just to stand at the higher end of the market needs some more kickstarter in terms of revenue booster or any some kind of kickstarter it's needed. but that's a kind of Kickstarter market is not able to get at the higher end of the market. Uh, so markets are trying to consolidate at this phase at this point of time, but due to the optimism and positivity and the very strong positive sentiment on Indian markets, the strong liquidity flows are safeguarding the market and keeping the market at a in a positive territory. That's what we are witnessing in the market. But right now, what we can watching in the market is the sectorial leadership rotation. That's what keeping the markets in a positive territory. Every week, one sector is taking the leadership position and taking the indices on a higher note and keeping the indices in a positive note. That's what we are expecting. Now, going from here onwards, we can expect a more about stock specific. We need to analyze right now the pockets of opportunities. It should be sector specific and stock specific from this moment onwards at this current juncture, Tanya.
Absolutely got that. And talking about the recent greed and fear note only, Mr. Batini. Now, Jefferies Wood has mentioned that midcap index is now trading at 25.9 times, as I said earlier, and it actually it's a biggest risk for Indian markets because we have seen a lot of stocks from the mid cap space already. They have turned multi baggers. They have given around 200 to 300% return in just 6 months. Do you think that, first of all, do you agree with the note? And if yes, what should one really do? Should one really book profits when it comes to mid cap space, or are there any stocks that are still, a buy at these levels?
I partially agree with the report, Tanya. Okay, we need to look at these companies on a stock specific action. It doesn't mean that there are definitely some pockets where the froth has been there and the froth has been building up. And there are in some mid and small cap space, there are some compelling opportunities also there. So it's a mixed bag. We need to analyze this data more on a stock specific manner rather than sectoral or market capitalization way. There are uh, very good opportunities are there. Still, earnings visibility is quite strong for many of the companies. Obviously, right now, what one of the key observation in these markets is the high PE companies, they remain at a high PE note and they are trading at a higher note. It shows the earning visibility for that particular company and also the optimism towards that particular company. But if there is no earning visibility in these companies and the sector is the company is going through challenging situation, if, if the valuations are stretched, that's where the froth is getting generated. That's where need to be uh, utmost careful. But
Absolutely.
by and large, there are plenty of opportunities at this point of time. There are new themes are emerging, and we are seeing the stellar listings from the companies and the new listings. Past 3 months, the companies which are listed earlier, when a company comes for an IPO, and if they give the results, that tend to be on a negative note. But the recent companies, what they posted the earnings also, they are in a positive note, and the earnings optimism is strong for these companies. So we need to watch this data carefully, more on stock specific rather than centralized, rather than looking at a macro level.
Okay, absolutely got that, Mr. Batini. And you mentioned that somewhere the valuations are stretched. So I want to know those spaces. Of course, we are talking about mid-cap space. We have seen stellar rally coming in when it comes to railways, defense, PSU, and some other sectors as well. But I want you to mention those spaces where the valuations are stretched, and maybe the investors can go ahead and book some profits
Yeah,
if there are any.
yeah, the PSUs looks valuation stretched at this point of time. There is a excessive exuberance and euphoria is there. So one need to be specific in terms uh, of the PSU stocks are concerned. There is much exuberance is there, euphoria is there in the stocks. So one need to be carefully watch the earnings of these companies going ahead, Tanya.
Okay, PSU is the space. So, any other opportunities that are still there? Because you mentioned that there are some spaces that can actually offer some kind of return, and somewhere the momentum can sustain going forward as well. So, which are those spaces from the mid
Yeah,
cap space?
clearly defense, Tanya, we have been discussing
Okay.
many times on your show. Defense has been a stellar in terms of the order book visibility is concerned, and also the price sustainability also is concerned. And also the new theme in the PSU space and private sector space has been railways. Railways has been quite strong. The earning book visibility is quite strong going ahead. So any dip in the railway stocks also, it is a warranted buy for the investors going ahead, Tanya.
ठीक है. Okay, absolutely. So this was all about the mid cap space, but the one stock which is in focus today on the back of news is Vodafone Idea. The stock was up around 9 to 10% in the morning trade, and it is up around 7% as we speak. So the company has announced its consideration of raising funds through various ways, including a rights issue or a further public offer of shares. Now remember, the telecom company has been engaged in discussions with lenders and investors for several months regarding fundraising, and if we see the action at this point in time, 8% uptick there, 17.55, that's the level on Vodafone Idea. What are your thoughts, Mr. Batini, on Vodafone Idea, and how do you look at this development?
Tanya, we need to look Vodafone in two ways. One is how the company individual performance and the business performance is concerned. They could not able to gain the market share. Their subscriber base has been coming down drastically. That's the one key concern. Coming to the capital infusion and all. Okay, this news keep on comes. Whenever this news comes, we'll see uptick in this company, and the next time after a week later, uh, the stock prices get fizzled out. That's what we have been witnessing in Vodafone Idea is concerned from the past couple of years. But since we are in a bull market, the stock has been slightly inching on a higher note. One thing is, it's a positive news to from the company that promoters are interested to infuse the capital. But when they are going to do the capital infusion, the timelines also needed, and they need to execute the capital infusion. And the other part is the company has to stand and gain the subscriber base. They need to increase the one hand subscriber base, and also the ARPU is concerned. That's where the real worry of concern for Vodafone in a medium to short term. If the subscriber base is going up, because right now we are in almost all duopoly market, still the chance for the third one is there, but Vodafone is not able to withstand the pressure from the big other two. They have been losing the market share to Bharati and to Zio.
Okay, absolutely. Got that, Mr. Batini. And some of the banking names are also in focus today. And this is because Goldman Sachs has issued a sell call on Yes Bank and downgraded two other banks, that is SBI and ICICI Bank. Now, when it comes to HDFC Bank, it sees a 33% upside, but it has downgraded SBI to a neutral rating with a target price of 741 rupees. ICICI Bank to neutral again with a target price of 1068, and Yes Bank to sell with a target price of 16 rupees. I want to know it from you, Mr. Batini. First of all, what do you think of the report, and what do you think of the banking stocks, and specifically Yes Bank, SBI, ICICI Bank?
Yeah, just to interpret the report, definitely S Bank could not able to show the earnings momentum. Okay, in terms of the business is concerned, that's where the key cause of worry for S Bank. So we do have a sell call with respect to S Bank is concerned in a medium to short term. Uh, whereas for the ICICI and all, they are fully priced in at this point of time. That's what the current report warrants at this point of time. Of course, we do have a buy call with respect to HDFC Bank is concerned. Any dip in HDFC Bank is a warranted buy for the investors for a medium to long term perspective. While coming to State Bank of India, the recent quarterly results have been not uh, uh, optimistic, not in line. But any dip in State Bank of India is definitely a good warranted buy for the investors. We any dip from this level, the stock offers a very good amount of margin of safety. The stock has not participated in the recent rallies. The margin of safety in State Bank of India is definitely high, and their subsidiaries have been doing extremely good. So we can expect some kind of positive momentum in State Bank of India going ahead, Tanya.
Okay, absolutely, Mr. Badini. And let's discuss Geo Financial Services as well. Let's pull up that stock because a new all-time high for this particular counter, 347, that was up around 14%, and it has crossed that 2 lakh crore market cap mark as well for the very first time today. Now remember, 2 weeks ago, Geo Financial was in the news amid speculations that the Ambanis have been in talks to buy the Paytm wallet business. So coming to you, Mr. Batini, for a quick check on Geo Financial Services. Where is the stock headed according to you, and what's really next? Because if you see at this point in time, 334 is the level where we are at, 10% uptick there already on this stock.
Yeah, Tanya, it is a high point of the day and high point for the company. Uh, yeah, the news what you mentioned is there are have been uh, uh, news for these companies. What kind of strategy, inorganic growth strategy they are going to have, how they are going to increase the revenues. This is the crucial thing that has been playing for your financial services in the medium to short term. But on a longer term basis, they have a decent set of earnings, but with respect to the 2 lakh crores market capitalization at this point of time, the valuations look stretchy for this company. But
Okay.
we need to see how the the earnings are going to pan out in the next couple of quarters. That is extremely crucial. At this point of time, investors can hold on Geo Financial Services. They can stick to the company. But in terms of the taking the fresh entry at this point of time, there is no need to go and jump and buy this company at this point of time at this kind of valuation. One need to wait and watch how the things are going to unfold next couple of quarters, or what kind of strategy they are going to have in terms of the inorganic growth, and what kind of uh, opportunities they are going to take in terms of the financial markets are concerned, both in NBFC lending or in fintech space, or the mutual fund foray, or kind of wealth management foray. These are the things one need to keenly watch for Geo Financial Services is concerned. It is a stock to be on one's radar going ahead, Tanya.
Absolutely. And SBI Life, I think we should pull up that stock. That stock is on a roll today. Remember, this stock has been consolidating for the past few weeks. And I was actually looking for a reason for this surge that we are seeing, Mr. Batini. I couldn't find it. But some of these life insurers like SBI Life, HDFC Life, these stocks are up in the trade today, and I want to know it from you that what's really exciting in this space, and where is this stock headed?
Tanya, what happens is normally the life insurance companies, they normally does in the last quarter of the year, they does the 60 to 70% of the business. It is the phenomena across most of the life insurance businesses. So normally in the month of Feb, and as we are in the middle of the last quarter of the financial year is concerned, so some kind of momentum normally we can expect in life insurance companies, as the tendency is most of the investors tend to go for the tax savings uh, and taking the life insurance policies. The tendency always there for life insurance companies. So in the last quarter, some kind of momentum and positivity we can see. We need to see the premium collection for these companies on a month-on-month basis. Definitely, given the kind of momentum in the economy and also the financialization of savings is concerned, uh, these companies are going to benefit in the medium to short term and also in the longer term.
Okay, absolutely got that. And Sona Comstar, I think we should pull up that stock as well, because that stock is on a roll after the company received certification under the Auto Production Linked Incentive, that is PLI scheme, and it is up around 6% as we speak. 650 is the level on Sona BLW, if we could pull up that stock for our viewers. And the 52-week high is 670, but it has also recovered from its 52-week low of 401 rupees. Coming to you, Mr. Batini, for Sona Comstar, I mean, where do you see this stock heading going forward, and what are your thoughts?
Uh, Coming to the Sona BMW, Tanya, the stock was in a long consolidation phase. Okay, and we have witnessed some kind of strong rally that's in the stock from in the last 1 quarter, and the numbers have been decent as the given the kind of momentum uh, in the auto industry is concerned, and also the EV segment is concerned. Sona BMW is going to take the benefit from both these developments. One can hold on to this company on a medium to longer term basis uh, uh, for the investments are concerned for the investors. It's a right time to buy this company. Definitely, if the investor have a long term horizon, definitely one can add this company in their portfolio on a staggered way.
By the way, this company has become the first auto ancillary company to receive this certification under the PLI scheme. And you know, Mr. Patini, we have been talking about auto ancillary companies because experts are bullish on auto ancillaries companies rather than auto companies, because we have seen stellar moves coming in when it comes to Aisha Motors and then Hero Moto also. But these auto ancillary names, they are also performing really well. I mean, if you look at Motherson Sumi and now Sona Comstar, any other pick that you have from the auto ancillary space?
Tanya, yes, always the OEMs are always fully priced in. That is the reason we normally tend to see the prices of these moments for a OEMs uh, uh, go slow. But Tata Motors company, one can add at dips. Mahindra and Mahindra, one can add at dips because of the diversification what they are doing in the medium to long term, the entering into the EV space aggressively. So these are the templates they are carrying. So one can add names like Tata Motors and Mahindra. Uh, if the investor have a pretty long-term horizon, definitely one can add these companies, OEMs also uh, on a uh, medium to long term. Coming to your question, the auto ancillary companies are concerned. We have a whole list of companies, so we need to look for in these companies very stock specific, and also the valuation matrix also one need to keep in mind.
This is, by the way, the darling of the Lal Street, as everyone says. So, coming to now these oil marketing companies as well, Mr. Batini, because you know a few brokerages houses, they have actually initiated a sell rating on companies like HPCL, BPCL, IOC, and this is because of the marketing margin worries, as they have mentioned. I want to know it from you because these stocks have had a stellar run. They have given good amount of return in the past 6 months. Do you think the bull run is now over for these companies and now is the time to maybe book some profits?
Tanya, if the investor is a long-term investor, definitely one can hold on to these companies. These
Okay.
companies offers a very decent value for the investors with a very good dividend yield for the investors. But as we are coming nearer to the election, one can expect some kind of margin pressure on these companies. Any price cut in terms of the fuel prices are concerned, it's going to create some kind of pressure on these companies' earnings in the medium to short term. But as long as the crude is trending at $70 to $80 per barrel, nothing to worry about these companies despite of the negative downgrades given by the broking houses. If the investors are pretty long term in nature, definitely they can hold on to these companies. These companies exhibited stellar performance recently, and also uh, uh, companies offers a strong margin of safety for the investors. So if the investor or a trader looking for a short term, one can book from profits from the table. But if the investor is a long term in nature, one can hold on to these companies despite of the medium to short term headwinds.
Okay, absolutely. By the way, we have slipped in the red as we speak, but that 22,200 level, that is still intact on Nifty. Let's see how the action pans out. We're just 4 minutes away from the market closing. but 22,000, okay, now 22,200, that level is now gone, and we are trading 20 points lower as we speak. So kind of volatile market today, but we have seen a stellar rally coming in when it comes to this week, because record highs on a daily basis, and today also the high was 22,297, just 3 points away from that 22,300 odd mark. But lastly, Mr. Batini, let's discuss the strategy at this point in time. I mean, what should an investor do? Because I mean, US markets or maybe the global cues that are very strong. We have seen the strong moves coming in on the back of that Nvidia news, its stellar earnings, and you know, Nasdaq, Dow Jones, all at record highs. So strong positive global cues coming in, and DIIs are also buying at this point in time. So what should be the right strategy for all the investors who are watching you right now?
Yeah, Tanya, you are absolutely correct. The statement is perfect. The global markets across the globe have been performing well. They are going at a very strong note. Liquidity-led rally, what we can witness across the globe. And even Indian markets also, it is more about the liquidity-led rally at this point of time. Given the hope, when the bigger question is when the Fed is going to reduce the interest rates, when we'll see the first rate cut. That's where everyone eyes are looking forward uh, from uh, uh, from the Federal Reserve. But it seems when the rate cut is imminent, but the question is when the rate cut is going to come, which can give the kickstarter to the earnings going ahead. Uh, at this point of time, investors, one can have a very staggered approach at this point of time. One need to be very stock specific at this point of time. What they are buying is extremely crucial, because uh, in most of the cases in a phenomenal bull markets, people tend to lose their senses and buy every stock they come across. That's where investors need to be careful. And if the earning momentum is good, and the visibility of the earnings are good, one can add those stocks in a staggered manner at this point of time. It is by and large, markets are in a range bound. One can trade at this in these markets also. But for the deep value investors, meaningful investings are concerned, one need to be bit careful. They need to know the value of the gunpowder they carry to have a strong investment journey at this point of time.
Absolutely, you said it. I think be careful and invest in staggered manner. That's the word coming in. And on that wonderful note, thank you so much, Mr. Batini, for taking the time out and being with us here on BTTV.
Thank you, Tanya. Always my pleasure to share my views with the viewers of PTTV and with you. Thank you.
Absolutely. So with that, ladies and gentlemen, it's now time for me and my team to wrap up this edition. And Nifty, of course, is below that 22,200 odd mark. 158 points gone on Nifty Bank as well. So we are deep in the red. But let's see how the action pans out and whether we are able to reclaim that 22,200 mark tomorrow or not on Monday. Have a great weekend, and with that, it's a wrap on this edition of Market Today. But stay tuned, lots more coming up for you only on BTTV. Stay tuned, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Look at our own example. Very literally in our first year of independence,